Today I have a very exciting video for every single one of you out there. We're going to be going over 10 trades with a variation of about 5 different patterns, and yeah, we're going to have some fun. I've picked out 10 trades here just as examples for you to maybe print off, put on your wall, something you can observe in the live markets, and hopefully formulate a plan to start using them yourselves. The main focus today is going to be following my trading rules. These trades have been handpicked to win, but as long as they follow my rules, that's what matters. Now, this is all for pattern recognition so that you can just get used to seeing and identifying setups, concepts and principles that you can be applying to your trading so that you're not rushing into trades, but more so planning. So my simple rules are going to be: price must break a structural level, we must have a retest of previous structure, 2 wick rejections minimum, we must have a target level and also a break-even range. And that's it. So let's head over to the charts. We've got 10 pairs, 10 different trade ideas, and I hope you enjoy this one. So the first trade we're going to take a look at here is on pound USD on the 1 minute time frame. Now, as you can see here, price has broken our key level, which is a very, very important factor when looking for our trading opportunities. What we can see here is price was pushing higher, making higher highs and higher lows. We have a structural high, a really nice retest here of the previous structure, and a move to the upside. Now, price broke out and broke back into the structure. This kind of pattern here, we usually visualize this or understand this as an indecision. But as you can see, price ripped through the structure here. We had a gap and then we came back to retest it. As I said, we have our retest of structure, a broken level, our 2 wick rejections, and this is just an absolutely beautiful trade. In terms of looking at this for management purposes, we're looking in and around some of these levels here and some of these levels here to make sure we can lock this trade in at break even. And then as you can see, price has reached our target level. An absolutely gorgeous trade here. I mean, not often does the market rally like this, but I guess on some occasions it does. And these are the trades that you're really going to be waiting patiently for in the long run, you know, taking small profits along the way, making sure you have small losses along the way so that when you have one of these big winning trades, you're making money and not making money back. So I thought this was a great example for our first trading pattern today. Just a simple consolidation off of the back of an uptrend, a break close below structure here, retest, 2 wick rejections, and now we see the market rallying to the downside. We've got another 9 more trades to go, so let's continue. So the second trade idea here is on EURUSD. This is the 1 hour time frame. Now, as you can clearly see here, we have a beautiful downtrend here. Price has been rallying to the downside or pushing to the downside for a very long period of time. We have these really nice pullbacks, push phases, retests of previous structures, and you can clearly see that the market is trading below our brick wall here. The structure is down, and to be honest with you, this just looks like sell bias all the way. Now, when we're looking at this trade, we're looking for price to come back to a key level, and as you can clearly see, we have come back to a key level. We have price tapping into this level, and we're now forming a double top pattern. An absolutely gorgeous trade to be looking out for in the markets. It's a key level trade. Price we expect to come back down to some of these levels here, which is our target lows for initial targets. But as you can see, this candle here absolutely smashed through this key level, giving us a great opportunity to hold this trade and continue on to try and target a 1-to-2 risk to reward ratio trade. So that's a beautiful trade, another pattern for you to look out for. And let's move on to trade number 3. Trade number 3 here is on USDJPY on the 15-minute time frame, and as you can see here, it's an unreal double bottom pattern. You can see here that price is trending to the upside. Very simple. We have price creating a level here. We have price respecting that level. We enter on the engulfing candle here. As you can see, we're targeting a nice 1-to-3. If price is in an uptrend, we expect it to make a higher high, and as you can clearly see, the market is respecting the trend line here, and voila, trade smashes take profit. Again, another simple trade and pattern for you to follow. One thing I really love about this is the engulfing candle entry. We're entering once we see the market pushing in our direction, and yes, we enter the trade. We're not worried about any of these levels here because we can clearly get a break even 1-to-1, and as you can see, we're targeted at 1-to-3 here. Let's move on to trade number 4. Trade number 4 is on EURJPY. Now take a look at over here. The market was trending down, right? Then we can see that the market started to enter into a consolidation. So anything in this area is price, trapped in an area. Price, as you clearly see here, struggled to break and make new lows. And then eventually the price demolished this level with this strong bearish candle to the downside. Price came back as part of our plan, retested this level, a beautiful wick rejection, entered the trade, and as you can see here, pretty simple. This is what I will classify as a perfect break and retest from a consolidation. We're looking for price to break out to show a directional bias, then we're looking for price to retest and continue that bias on in the direction it's broken out of. So let's move on to trade number 5. So this is slightly different here. We have a weekly key level. Now I'm not going to go back because we're on the 4-hour time frame now on British pound JPY, but this is a weekly level here. Now, as you can see, we have a channel. Now price is respecting this channel from the ceiling and from the floor, just really trending up nicely. We're not trying to focus too much on the smaller structures. We're focusing on the overall directional bias. As you can clearly see here, the cleanest and easiest trend trade you will ever see in the markets. Price pushes higher, creates a level, comes back to this level and respects this level. Again, once price creates this pattern, we visualize this as a double bottom in view of the market continuing to push up as part of the uptrend. We enter the trade, doesn't matter how you enter, as long as your stop loss is safe. And as you can clearly see here, we targeted the weekly level, and look here, smash take profits. Beautiful 3R in this trade, and as I said, it's one of the cleanest and easiest trend trades you will ever see. Just keeping it super simple, making sure your stop loss is well out of the way of the trend line and below the structure levels here, and all you're anticipating is the market to continue pushing higher. So let's move on to trade number 6. So here we have Aussie dollar USD on the daily time frame. Now this is slightly different to what we're used to. The markets here are creating what I like to call subliminal higher lows and higher highs. And as you can see, price creates a structural higher low previous to the previous structural low. And then it continues to do that here, here. And once price broke above this level and this level, this indicates bullish sentiment in the market. As part of our plan, we're waiting for the market to come back, retest, leave the wick rejections. This is a textbook retest. Also respecting the trend line here, which I like to call the brick wall, because trend lines are subjective. But as long as price is trading above this level, we enter the trade, and as you can see, price is respecting the trend line, and Bob's your uncle on this one. Let's move on to trade number 7. So here on USDCAD, you can clearly see here that we're on the 30-minute time frame. Now price has clearly obliterated structure. Now what do I mean by that? Well, if you look here, we can clearly see that price has broken a level where it failed to break for a long period of time. We have a really strong push phase here. After a push phase, we're anticipating a pullback, a retest of structure, remember, and we enter the trade, a 1-to-2 risk to reward ratio trade here. And as you can see, we have enough range at this low from our entry to have a break-even range. And with price breaking structure, it's definitely clear to see that we're reversing. So we're waiting for price to confirm this after this bullish move, consolidation, break, retest. Then we identify this as a structural high, lower high, lower high, and then we're looking to enter the trade as part of our plan. Let's move on to trade number 8. Trade number 8 is on New Zealand dollar USD on the 5-minute time frame. We are clearly buy biased. Anybody who tells me different, I think we'll need to go to Specsavers. But as far as I'm concerned, the market is trending up. We have multiple wick rejections here. We have a huge engulfing candle that closed, but we're entering on the break of structure here as part of our plan, making sure that we go for at least a 1-to-2, 1-to-3 risk reward ratio, in this instance of 1-to-3. Price pushed higher, created our patterns, and now we take the trade. Pretty simple, not the easiest because price doesn't pull back as much, etc, etc. But we have multiple wick rejections here and an engulfing candle here. Once closed, we entered before that at the break, and we enter the trade anticipating the trend to continue up as part of the buy structure. Let's take a look at the 9th trade. Aussie dollar JPY, a simple double top pattern here, guys. As you can clearly see, the trend is down. Price is making lower lows and lower highs. We always want to trade with a trend, and when you're trading with a trend, you can't go wrong. You can lose a trade, but you can't go wrong, simply because we always anticipate in a downtrend price to make a new lower low. So if you're entering at the breaker structures when the market is moving, you're going to give yourself the best odds of winning this trade. Price comes back, creates a simple double top pattern as part of our plan. We enter after an engulfing close, and as you can see here, we target a 1 to 2, and yeah, Bob is your uncle in this one. And let's take a look at our final trade on euro pound. So euro pound, we can see here, price violated structure. We have a really strong push to the upside. Price is not making the cleanest of trends, but it definitely is trending and making higher highs and higher lows. We have a strong push phase above a level where price failed to break above. A really strong pullback to a key level that we're always waiting for and looking for. And we can see here again, another beautiful engulfing candle close. Nice retest of structure, as I've put it here, perfect retest. And another simple trade, buy bias, higher highs, higher lows, engulfing candle entry, and targeting our 1 to 3s here. This is our range. We smashed through this, and then we continued up to make our last endeavor, which is the 1R for our 1 to 3. So there, the 10 trades. I think we had a variation of about 5 to 6 patterns there, and I bet you didn't realize something. Only one of those 10 trades were part of the plan. If you remember what I said in the beginning, take a look at the video. So my simple rules are going to be: price must break a structural level, we must have a retest of previous structure, 2 wick rejections minimum, we must have a target level, and also a break-even range. And that's it. So as you can see, I said that we must break structure, we must retest structure, look for 2 wick rejections, and then make sure we have enough break-even range and target range. Only one trade out of the 10 had 2 wick rejections, and as a matter of fact, the last 3 trades had no wick rejections. Now, what is the point of this video? We all have trading plans, and a lot of traders after a period of time start to deviate. And the reason for that is because traders are the biggest storytellers. Our brains are designed to work with pictures, we have an imagination, and once you spend a lot of time on the charts, what you will find is you start building a picture based on how you want it to be. Now that is one of the biggest reasons why traders do not in the long run become consistent, because they're always making up reasons why they should be taking that trade or why they have taken that trade. What I want to say to you now is you don't need to be as stringent as I'm making it out to be. Those trades were absolutely fantastic trades, but if my plan says 2 wick rejections, then that's what I should be waiting for, because obviously the system that I've built has built based on the fact that 2 wick rejections work best for me. It allows me to be more patient, it allows me to plan, and it also allows me to follow my plan. So moving forward, don't spend too much time on your charts. Try not to become a storyteller. Try not to allow your imagination to run wild and start to create these pictures that don't exist. Write a plan. Make sure you have illustrations of the trades you should be taking as a constant reminder, so that when you get to the charts, you're laser focused, you know what you're looking for, and you can zero in on the trades that you should be taking, so that in the long run, the numbers play out in your favor. Because the more you allow your imagination and you start building confluences that don't even exist, which we did on 9 of those trades, as I said, only 1 had 2 wick rejections, you will validate any trade to be correct. And that's where you will differentiate yourself as part of the majority and become the minority and become consistent and profitable if you can start to recognize what you should and shouldn't be trading. So I hope you enjoyed that video, and if you did, smash that like button for me, turn on notifications, subscribe if you're new, and until next time, continue to trust the process.